Welcome back. It's time for today's three stock lunch, and we're trading three big movers as the averages come off their worst day of the year. Palo Alto is up double digits on its third consecutive quarter of profitability after years of losses. Wingstop, we talked to the CEO last hour, also up big on strong earnings and those falling chicken prices. And Cheniere, the LNG stock, still near all-time highs, even though nat gas prices have plunged to their lowest levels in more than 2 years. Let's bring in Scott Nations to trade these. He's Nations Index's president and CIO. Scott, Palo Alto, cybersecurity, you a buyer?
I am absolutely a buyer. I just love this space. I think this is the one part of tech that's going to avoid belt tightening. And let's face it, cybersecurity is an existential threat for every big company out there. And you have to be really brave if you're the CIO who wants to skimp on cybersecurity spending. And for Palo Alto Networks, their ability to marry cybersecurity and AI is both really sexy. It's going to be lucrative. Last time I looked, up 11.7% on the day. That's because EPS came in at $1.05 versus 78 cents. Forward PE of 44 means it's not cheap, but expectations for growth for the next few years come in at 20% a year. So you're likely to get the growth you're paying for.
So let's talk about a company that's about as far away from cybersecurity and AI as I can imagine. That would be Wingstop, the chicken wing seller. What do you think?
I'm a seller. It's up nearly 10% this year. Congratulations on 19 straight years of increasing same-store sales. But much of the profitability is because chicken prices are falling, and that's not going to continue. With a forward PE in the triple digits, they're going to have to execute perfectly. There's no room for error whatsoever, and there's going to be a ton of competition in the chicken space. I think in order to grow that much, they're going to have to clutter their menu. We've seen what that does to some other fast food names. It really impacts the customer experience. Listen, I love wings and a cold beer as much as anybody, but I'm cold on Wingstop.
Yeah, a lot of people allergic to that valuation. Let's turn now, even a tougher pivot, to Cheniere Energy. And it's surprising to me that these stocks, broadly speaking, have held up so well. But what do you see?
I agree. And so I would be a buyer on dips here of Cheniere. Natural gas futures traded below $2 today. First time in a long time. Even though some people think they're coming for our cooktops, I do think that I want to be a buyer on dips because nat gas is one of the fuels of the future. And they're not just producers. They also have an infrastructure business that will cushion some of the volatility. Forward PE of just 7 means it's a bargain. I mentioned volatility. We can use that to our advantage. And so I would put limit orders to buy a really good company in a really good space, put limit orders below where the market's trading now, and take advantage of some of that volatility because nat gas and the companies involved, just sickening volatility sometimes. Well, let's use that to our advantage and buy cheap on a big dip.
Yeah, interesting take, Scott. Thanks so much for your time. It's good to see you today.
Thanks, Kelly.
Scott Nations.